In this video, we will discuss 8 stocks that legendary investor Ray Dalio is buying. 4 of these stocks are down almost 50 to 60% from their recent highs, but now the trend in these stocks is changing, and investors can expect handsome returns going forward. The other 4 stocks are blue chip bargains that are available on discount given their superb and growing business model. But first, let me explain to you why you should be interested in what stocks Ray Dalio is buying and selling. Ray Dalio is an American billionaire investor, hedge fund manager, and philanthropist. He's been named twice to the Time magazine list of the 100 most influential people in the world and Forbes' list of the world's wealthiest individuals. Ray Dalio has made several successful investments and has a superb track record. For example, in the early 1980s, when long-term government bonds were offering high yields due to high interest rates, Dalio correctly anticipated a decline in interest rates. His investments in long-term government bonds proved to be extremely profitable as interest rates decreased, resulting in substantial capital appreciation. Dalio is an expert when it comes to timing market cycles. In 2008 and early 2010s, as global economic uncertainty increased, Dalio's Bridgewater Associates increased its holdings in gold. This move paid off as gold prices rose significantly, providing a strong boost to the firm's overall returns. Dalio's investment approach includes analyzing global macroeconomic trends, including currency movements. Bridgewater has successfully executed currency trades based on Dalio's insights. For example, his firm correctly predicted the depreciation of the Japanese yen against the US dollar and profited from the trade. Ray Dalio has also made several stock bets in tech companies that later turned into the behemoths we see and interact with today in our daily lives, like Apple and Microsoft, just to name a few. Now, having established why we should listen to Ray Dalio, let's discuss the 8 stocks that Ray Dalio is buying nowadays. First on the list is First Horizon Corporation, ticker symbol FHN. The company operates through 3 segments: regional banking, specialty banking, and corporate. Currently, it's trading near $10, down from almost 60% from a February high of $24.90. Ray Dalio bought 480,000 shares of this stock in the first quarter of 2023. The reason Ray Dalio bought this stock is the sound financial health of the company and its ability to absorb the ongoing financial meltdown in the United States. Bank of America analysts are also rating First Horizon as a buy opportunity right now and says the regional lender is well capitalized and a potential market share gainer. Bank of America has assigned a target price of 14 to First Horizon stock, implying almost a 40% upside from its current price. After receiving payments from TD Broken Deal and converting preferred shares, First Horizon has a comfortable pro forma SETI ratio of 11.1% and a pro forma tangible book value per share of $11.70. I consider a fair value estimate of $14 to $15 for First Horizon in the near term to be very reasonable. However, as market conditions stabilize and normalize, I believe that the fair value could increase and potentially reach $20. FHN stock could double if the economic scenario improves a little as interest rates start to decline. The second stock that Ray Dalio bought 1.3 million shares of is Grab Holdings Limited, ticker symbol GRAB. The company offers its Grab ecosystem, a single platform with super apps for driver and merchant partners and consumers that allows access to mobility, delivery, digital financial services, and enterprise sector offerings. Currently, Grab is trading near $3, down significantly from its 52-week high of $4. If you look at the longer duration chart, you will notice that Grab is down almost 83% from its initial price offering. Ray Dalio is particularly interested in this stock because Grab operates in a region that is experiencing rapid development in demographics and adoption of Western technologies. Grab's super app strategy and early lead in key markets make it a dominant player in the Southeast Asian tech ecosystem. The company's focus on profitable verticals like food delivery and ride-hailing, coupled with the potential of its fintech platform, make it an attractive investment opportunity. Grab has formed partnerships with over 25 million consumers, more than 2 million merchants, and over 5 million driver partners. The large, unbanked, and underserved population in Southeast Asia presents a significant opportunity for Grab's financial services segment. Over 40% of the population over 15 years old in Southeast Asia is unbanked, and around 39% of the banked population is underserved, with limited access to credit cards, checking, or savings accounts. Recently, the company reported superb earnings. The company reported a revenue of $502 million, beating estimates by a whopping $96.6 million. The CEO commented, quote, "In the fourth quarter, we achieved revenue growth of 310% year over year, while improving our group and delivery segment adjusted EBITDA margins and maintaining regional category leadership across our mobility and food deliveries businesses." Future guidance for full year 2023 is also very optimistic. And that's the reason I believe Ray Dalio bought this stock, because, as mentioned earlier, the Southeast Asia region is experiencing rapid growth, and tech companies provide compelling buying opportunities in stocks that have been beaten down due to overall market sentiment. Third on the list is Genworth Financial, ticker symbol GNW. Ray Dalio bought 609,000 shares of this stock. Genworth provides insurance products in the U.S. and internationally. It operates in three segments: Enact, U.S. life insurance, and runoff. It is currently trading near 5 and has a superb track record of stock price performance. The stock is up 38% in the last 12 months despite the market index suffering one of the worst years to invest. This means Genworth is a gem of a stock, and it took no beating from the negative sentiments. Looking at the ratings, the stock is rated a strong buy from SA analysts and has a hold rating on the basis of quantitative score and Wall Street analyst opinions. The company's main subsidiary, Enact Holdings, contributes significantly to the net profits. You'd be surprised to know that the current market capitalization of Enact is around $3.8 billion, whereas Genworth, which owns around 81.6% stake in Enact, is trading at just $2.6 billion. The current price is suppressed due to the overall market sentiment, and that's the reason that I believe Ray Dalio bought this stock. The fourth stock on the list is BGC Partners, ticker symbol BGCP. Ray Dalio bought 618,000 shares of BGC. Currently, it's trading near $4.40, and it is priced for perfection. Stock price is showing a good momentum over the last 12 months, but all other metrics are showing that the stock is fairly valued at current price. Still, stocks with strong momentum tend to perform well. There is comprehensive academia research published on the topic of momentum, but I would stay away from this stock and refrain from trying my luck on the basis of probability. The company offers a minuscule dividend yield and not much upside, so this stock is a pass on my side. There are other interesting stocks, though, that Ray Dalio bought during the last quarter. The fifth stock that Ray Dalio bought is Meta Platforms. Ray Dalio boosted his stake in Meta Platforms, also known as Facebook, to 1 million shares from its previous holdings of 536,000. During Q1, Facebook was down 50% from its 52-week high of $244, and since then, the stock price has doubled. This is a very good example of buying the dip strategy. But remember, investors should only buy the dip in the stocks when they believe the stocks offer a good value proposition and have strong future prospects. Facebook's business model recovered very fast and is now poised for super growth going forward, especially from AI and metaverse projects. Dalio doubled his stake in metaverse because he believes in the future of Facebook. The sixth stock that Ray Dalio bought is PayPal Holdings. Dalio also bought PayPal Holdings and increased his stake to 1.55 million shares from 971,000. PayPal is still down 80% from its recent year high of $306, but all the Wall Street analysts are bullish on PayPal and have assigned buy rating to the stock. But one thing that concerns me, though, is the D grade that analysts assign to the current valuation to the PayPal stock, despite its price falling 80%, whereas profitability and growth factors are given A and B grades respectively. This means that analysts and seasoned investors like Ray Dalio expect that ultimately the valuations will improve as the company experiences super growth. So I say that PayPal's an interesting buy if you have the holding capacity for a year or two. Dalio also bought Google stock and more than tripled his holdings in Google stock from 743,000 shares to 2.31 million shares. Google was down 40% in Q1 from its recent highs, but since then, they have recovered handsomely. Google was rated a strong buy on the basis of quantitative score and buy from SA analysts. Given the recent run-up in stock price, valuations are a bit stretched now, but Google's business model is an ever-increasing model. So the future is bright for Google.